Hello, ladies and gentlemen. Greg McCloskey from ForexLive.com. This is a Forex quick look at the dollar versus yen. Today's date is May 10th, 2023. The U.S. dollar is taking a sigh of relief and a move to the downside as a result of the CPI data, which came in a little bit lower than expectations for the headline number of 4.9%. Higher car prices helped to push the price to the upside. Also, Shelter continued its move to the upside. Traders are still waiting for those levels to come back down, or for those levels to move lower. So they look ahead whenever they say a big 4.4% rise in, say, auto prices. That can't be sustained month on month. So we look for something a little bit more tamer next month, and that is what it seems like the market is reacting to. We are seeing yields move lower. The 2-year yield is now down at 5.6 basis points. That is off its lowest level, but back below the 4.0% level, currently at 3.97%. We are seeing futures move higher in the stock market, with the S&P up 38 points. The NASDAQ index is up 148 points, and the Dow Industrial Average is up 214 points. So it looks like we're going to get a good start in the U.S. stock market. As far as the dollar versus yen, we see a sharp move to the downside here, which took the price below the 100 and 200-hour moving averages. If we look at the price action here this week, or actually over the last few days, the 200-hour moving average, which is moving higher, has been the ceiling for the pair on the downside. We start to see support against the 100-hour moving average. So the market broke below broke below the 100-hour moving average. Also, this swing area going back in time, where we had different swing lows and highs. You can see them through here, especially right here, where we had 1, 2, 3, 4, 5 different lows. So we're breaking below those levels. So what is the trade? Well, the trade is the bias turned back to the downside, with the 100-hour moving average now as resistance. Also, this swing area right through here is resistance. What was once support now becomes resistance, and that's what traders try to do, is figure out those levels where they can lean against, and hopefully the price stays below that level, and we see something like a continuation of the move to the downside here. So we want to see sellers against this level, and then a rotation back to the downside here. That's a trade, and the bias, and we can only go against that, what we see, what the market is telling us through the price action. So dollar versus yen bias is more to the downside, below the 100-hour moving average at 134.777. If it moves above those levels, all bets are off. We probably see a rotation back to the upside and further probing. As long as we can stay below that level, we'll look for the 50% retracement. We'll look for the low price that we saw here, which was last week's low prices at 133.87. Then further down, somewhere around the 133.44-ish type level for the dollar versus yen. Those will be the targets going forward. My name is Greg McCloskey. Good fortune to trading. Bye-bye now.